Hi, welcome to Let's Talk Bonds, the weekly podcast from INR Bonds. I'm Arjun Patsati, and in today's podcast, we will talk about the state development loans or SDLs, where the yields have shot up in the last few weeks and are trading at much better levels than many corporate bonds as well, and including Bharat Bond ETF. Just before we start, let me introduce Quick Invest by INR Bonds, the app. You can download the Quick Invest by INR Bonds app on iOS and Android, and you can invest in a curated list of bonds that is giving you the best returns, most information, and all you need to do is download the app and see the bonds, click, and then you can invest in the bond directly. It's a very simple process, and the you can download it from the iOS and Android applications. Uh, Coming back to today's podcast, we saw bond yields rising last week. The 5-year government bond GSEC in the auction held on Friday saw the cutoff at 6.08%. And despite the higher cutoff, this is the highest yield seen in more than 2 years. RBI had to give the underwriters the bonds. So clearly the market is betting on more rates going higher, much higher, and this should impact all other bond yields. The 10-year government bond GSEC yield closed at 6.63%, again higher, but still down from what the highest it saw during the week, but still at much higher levels. And this is following the worries on the budget that is coming up because with high raw material prices and especially the government is especially on the fuel side and energy and all its derivatives, there could be a huge subsidy burden on the government on fertilizers and others. So this could really impact the budget, and borrowings could actually be higher this year in this fiscal year in the budget. Um, so, in anticipation of rising yields, the yields on state development loans (SDLs) have risen to 7.24% and higher, and this is clearly the highest level seen in many years. 10-year SDLs are getting at 7.25%. Now, comparing this to many other corporates that are trading at over 7% levels, you have the 10-year Bharat Bond ETF that is trading at 7.08%. So clearly, SDLs are much more liquid than the Bharat Bond ETF. You can trade it, you can invest through the RBI retail direct platform for retail investors. All you need to do is go to RBI Retail Direct, create an account, and you can straight invest in SDLs in the auctions or in the secondary market itself. Then even if you take the 5-year Bharat bond yield, it's still at below 6% levels, 4 years, which is 2026. Now, the 5-year government bond is at 6.08%. So clearly, Bharat bond ETF also is not looking very attractive. And the 1-year Bharat bond is below 5%. So clearly, even there, the returns are still very low, and largely, mostly, will be favored by institutional investors. Retail investors is not going to get anything out of investing in these bonds. As far as corporate bond goes, now there are a lot of bonds trading in the 7 to 8% levels. This is including HDFC. All these are over 5 year and 5-year maturities, so much higher maturity, and many of them are closer to 10 years. So, like bonds like HDFC, LIC, Housing Finance, and others, 7 to 10 year bonds are trading over 7%. So this makes that SDLs at 7.24 over 7.2% much more attractive than these bonds as well, because they are much more liquid than the corporate bonds. And you have bonds like other bonds like Tata Clean Tech. All these are good, well AAA rated bonds, higher safety. Still also offer trading at higher levels. also offering at higher levels. And uh, this is this can but even if you compare this to a state development loans, then you have the 10-year state development loan over 7.2%, much more attractive than these, given that rates are rising and the liquidity is much higher. It is in the state development loans, and you can invest as low as rupees 10,000 through the RBI Retail Direct platform, which is a very simple platform. All you need to do is, like I said, just go to our RBI Retail Direct, create your login, upload your KYC, and then you're set to go. And RBI has made it very simple for you to invest. On the other hand, the attractiveness in corporate bonds still lies with the lower rated bonds or select bonds, which can yield anything between 8.5 to 10% for 1 to 2 years. These include microfinance companies, a few other companies, yeah, and also some of the MLDs, market linked debentures, that we have been speaking about in our search for yields newsletter last week, where we spoke about the advent of about the increasing popularity of MLDs. So many investors are if they want to take in higher most liquidity and highest safety, are best investing in SDLs, while investors looking at higher yields with much lower maturity, given that interest rates are going to go up, are better off looking at good companies that can, in a 2 to 3 year, maximum 3 years maturity, 1 to 3 year maturity, yielding over 8%, can go all the way up to 10% levels if you identify the right corporate bond. As far as private placement goes, we saw many private placements happening. You had Aditya Birla doing an MLD. Then you had Tata Capital Finance coming out with the issue. Punjab National Bank came out with a private placement. The Federal Bank has done one. Tata Motors Finance has done one. Then Tata Capital. We had GMR in Trust Enterprises coming out with a zero coupon bond. And you had IIFL Finance coming out, and a few other like Navi Finserv, who's been very active in the markets, the new company. Vivriti Capital, private, they've also been doing a lot of bonds, MLDs especially, as and other smaller issuers have been accessing the private placement market. And I think we could see a lot more corporates coming to the market to raise funds, because of the fact that interest rates are looking to rise. They've already risen sharply and are looking to rise. And more and more investors now seek state government SDLs are better off than corporate bonds, then borrowing costs for corporates could rise. And now the only issue earlier was that retail investors could not invest in government GSECs and SDLs. It was very difficult for them. But now with RBI Retail Direct, it's the easiest thing to invest in SDLs and GSECs. And the investment amount is as low as rupees 10,000. And the liquidity is the best in GSECs and SDLs. So thank you for listening into the podcast. And please do download our Quick Invest for Buy INR Bonds app to invest in the best bonds for your portfolio.